Hello, everybody. Welcome to Bitcoin Not Crypto. My name is Forrest Stevens. Today we have a guest on the show, Konrad from the Bitcoin Well. He's a community manager there. He's also a mining analyst at Compass Mining. Do you want to introduce yourself? Tell me a little bit about how you got interested in Bitcoin.
Hey, Forrest, thank you so much for the intro and for having me on. Bitcoin was something that was coming up for me at the end of my time in university. I was kind of on the opposite side of Bitcoin. I was in economics at U of T, being really interested in either pursuing investment banking or central banking. I really took the whatever the opposite of the orange pill is. I had taken it. And around this time, one of my friends who was doing some volunteer work in the Bitcoin space in the mid or early 2017 time, they were telling me about their involvement with crypto. And what really sold it for me was that this business, online business, was paying employees in South America a dollar here and a dollar there. And I was like, how can you feasibly transfer money that far in the world with that little money involved? Like, it just didn't seem like I worked as a teller at the time at our bank at CIBC, and that like I deal with wire transfers, like moving money around from the banks is not easy. So I was like really interested in this technology, learned it, got kind of sucked in the 2017. Every coin is going to solve a different problem, and every coin is pumping, and it was way too much to really fathom at that time. So rode the wave, rode the wave up and down. And as the wave was coming down, I actually ended up landing my first job in crypto, where it was a crypto job. And I love the name of the podcast is Bitcoin Not Crypto, and I kind of had a similar journey, and I guess that's what I'll be able to explain here. So started off as running their crypto trading desk, and the company wanted to launch a cryptocurrency of their own. The company it was a Canadian-based company investing in American real estate and dealing with a lot of cross-border transactional friction, and also just opening up the real estate investment space to people was really difficult. And what they wanted to do was allow anybody to invest in any property through cryptocurrency. It's kind of like their bold mission. So the way that I approached this was we were able to acquire a portfolio of real estate assets, mainly residential homes, and then users would be able to buy a token from us that they could use to allocate towards a property and basically determine a pro rata income stream. We're basically going to enable a fully customizable real estate investment. And another issue with real estate is that very often when you have a REIT, real estate investment trust, they're not very transparent about the ownership, the revenue that's being generated from these properties. We wanted to change that. And so I wanted to have all the transaction, distribution, and accumulation be on the blockchain. It was on Ethereum at this time. And to complete that off, every property was an NFT, which is like funny because it was a practical financial application for NFTs way before the kind of art nonsense that kind of came around many years later. But as I was researching how to structure this cryptocurrency, I was looking at Bitcoin because Bitcoin was performing the best out of all of the altcoins in the 2018 bear market. And that led me to wonder why that was, beyond stuff like liquidity. And what I really uncovered was the Bitcoin mining sector and seeing the hash rate not stop. Like it was completely like up and to the right the entire bear market and bull market 2017 bear market. Like there's no noticeable dip in the hash rate. And I was thinking, okay, like everyone's talking about transaction volume, velocity, wallet counts, but like we have this real you can fake that stuff. Like I remember looking into like influencers that would help fake that for you, like when we were like trying to figure out how to get this coin off the ground. And then I'm realizing Bitcoin doesn't need any of that shit. Like these are all basically scams, and everyone just has their head down. They're buying huge amounts of capital, being ASICs. They have massive ongoing costs, being their energy input costs and operational costs, and this industry is still growing without a stop. Okay, like that really kind of led me to realize that like capital inflows are going to pursue the greatest expected value of returns, and because Bitcoin is the largest and has the great liquidity and is able to handle the most inflows, the network effect is just so runaway at this point that it's always going to be attracting the largest and smartest forms of capital. And that's continued to be true 5 years later. I eventually left the project because the company kind of wanted to orchestrate it more of like a pump and dump rather than the fractional long-term investment that I had designed. I didn't see an end to the timeline of the coin. I thought it just as being a vehicle, but as the intentions of every other cryptocurrency entrepreneur became true, combined with the bosses that I was working for, I thought it was time to distance myself from that project and focus on Bitcoin only. This was shortly after I think Michael Saylor had come onto the scene, and I really resonated with his view on trying to take a sophisticated investment and economics approach to justify the investment thesis for Bitcoin. Like, it's a completely scarce asset. It has a perfectly inelastic supply curve. In economic talks, what that means is when the price of it increases, even if more people want to make more of it, you can't. Like, you have a surfboard behind you, right? If everyone all of a sudden in the world got into surfing, the demand for surfboards would increase, the price of surfboards would increase, and more people would start making more surfboards. But Bitcoin doesn't work like that, because when its price increases, you can't make more of it. And if anything, less of it is made as time goes on. So as a scarce asset that's insanely useful because of how you can store it for free and transfer it for next to nothing, it becomes like, whoa, this is the thing, this is the future. And like, I thought I understood crypto, but when I understood Bitcoin, it made all of those prior assumptions seem like frivolous mistakes.
So there's a lot there. I'm just going to go off this last point here. The inelastic supply. When you're talking about the hash rate of the mining, this was kind of I've had so many aha moments with learning about Bitcoin, but one of them is, they when there's new miners, right? Like you said with the surfboards, another analogy, of course, is gold. When gold's price goes up, it incentivizes them more to mine. And with Bitcoin, when the price goes up, it incentivizes people to mine more Bitcoin, but more doesn't get issued. But you can increase your chance or your odds of getting that Bitcoin that is issued, and that increases the hash rate, which increases the security. It's like this kind of reflexive wheel with mining.
Yeah, and like, especially with the mining pools is kind of like a pretty great innovation for Bitcoin mining, because what that allows for any a Bitcoin miner of any scale to have guaranteed expected revenue. And when I say expected revenue, I say like, if you flip, if you play roulette, and it's like a 50-50 kind of board, there's no house that wins, then your expected value is a break even, right? You're expected to make money as often as you are to lose money. And if you have like a lottery, you could buy all your lottery tickets, and your expected value is kind of calculated by your total cost multiplied by your total payout, and kind of factored in for the probability of that. So it's a probability adjusted return. And when you have any kind of business, there's always a risk of, are you going to make revenue or not? You typically have to pay for marketing and various other services, right? But with Bitcoin mining, you can join a pool, plug your ASIC in, and you are going to get sats. Like, the amount of sats you get might not be like net profitable in the first 12 months or anything like that. But what business can you say that you can plug in with zero marketing, zero sales, plug in and immediately start earning revenue? Like, that's unheard of. And so that approach to Bitcoin mining is kind of the way I like to look at it, is like, you can have this, even though the supply curve is fixed and you can't make more Bitcoin, there's always going to be guaranteed Bitcoin to be made. It'll just be less today on average than it was tomorrow.
Right. It's more of it's like split between all of the people that or all of the mining that is going on. Um, and you're talking about mining pools. I think, to me, this brings up one of the concerns of Bitcoin right now is the centralization of mining and the effects of mining pools on that centralization. Um, Kind of the centralization of the block templates as well is another kind of concern that I've heard of. Do you have any insights on any of that?
Mainly that mining pools are really competitive. Like, they're always kind of cutting fees and trying to gain more market share. The market share of a mining pool is not stable. Even if a mining pool achieves more than 50% of hash power, I don't think it poses a risk to the network, because it's like, it would be like, well, for first off, everyone knows that like the cost to play the Bitcoin mining game is really expensive, and you can only really pay off that cost in the long run. And any attempt, like, philosophically, any attempt to thwart the Bitcoin blockchain to self benefit you will also compromise the value of the underlying currency, making your actions less profitable. Kind of, the game theory suggests that everyone plays by the rules, and I believe that that falls true. And the additional layered incentive is that mining pools are businesses that want to continue to make money. If they show any signs of compromising their business opportunity for their customers are going to leave. Like, their customers aren't contractually bound to stay with them for years and sacrifice their hardware. It's an opt-in, opt-out kind of situation. And imagine, how hard it was. How, like, when we see a bank, like exchange run, when FTX or Celsius, they're like, oh, they're questioning their reserves. People are racing to withdraw the reserves, and not everyone can because there's a limited amount of assets. But people still custody their ASICs, so they still control if they're hosting their ASICs. They still have the ability to action those ASICs in a pool that they want them to. So I don't really foresee the risk there to be too substantial. I think the only real risk to Bitcoin mining, I feel like, has passed, which would be it would become taken over or hijacked by the state, then used to just basically destroy the blockchain. But Bitcoin grew faster than the state's ability to take it seriously. And now Bitcoin's too big for the state to be able to compromise it.
Yeah, that's a really good point. And it would have to be this sort of self-destructive move or attempt to disrupt the underlying value of Bitcoin, for instance. And the natural incentives would be to just put that hash power into the network and get the Bitcoin reward from it, even if somebody was to like corner a huge amount of hash power, right? It's just like, yeah, the natural incentives are it's so clever the way that the incentives of Bitcoin are built, in my opinion.
I kind of just had this thought now. It's almost like Bitcoin is like the invention of agriculture, and it's like a hunter-gatherer society or group has no incentive to thwart the agricultural group that is taking some of their members because they have the ability to become more prosperous within the agricultural society. It's just an overall more prosperable situation for you to participate in. Except unlike agriculture, Bitcoin cannot be easily stolen. So you do not have to worry about losing your proof of work. You can secure it with the best security that's ever been known, which is the encryption that makes it unhackable, essentially.
No, that's a great description there for sure. I wanted to go back to close to the beginning of your story there with the real estate company that you were working with. I mean, I know that all these ICOs were kind of in the news and things, but like, how much did they really know about crypto, and why did they want to go that route with creating sort of a fractionized, tokenized real estate with on a cryptocurrency?
So it's funny. I was just chatting with a partner that we're looking to onboard for Bitcoin Well, and she's based in the United States and is a Twitch streamer. And Twitch streamers receive a lot of tips from the community. And if you're not looking to pay them through Twitch and receive a huge amount of, they're going to get like 30% of what you give them. If you want to pay them directly, it's really hard to do that because you run into the cross-border transactional friction, right? Like if I'm in Canada and I want to give someone in the States $5, it's by far the easiest to do this through Bitcoin. So that was part of the reason, was because the company was Canadian, investing in American properties, and if you want to quickly send money into the States, your wire transfer can be delayed. It has fundamental delays, but then also if there's any issues, it's going to be reviewed by the banks, or the receiving bank is having an issue. Like there's like multiple banks involved in wire transfer. It's so unpeer to peer. Like as a Bitcoiner, we're so used to sending money directly to another, or God forbid, from exchange to an individual. But like with bank to bank to bank, it's like there's so many intermediaries, and that creates the ability to miss out on a good deal if you need to act fast. It makes it more expensive, and it means less people can participate. So the goal was to be able to increase the unbanked promise of Bitcoin, or of crypto at that time. But also we wanted to create an investment. I wanted to make sure that the investment was something that was safe and then transparent, because that was when like the decline of all this was when the scams were starting to come out. Like this is when I was figuring out that Ripple's a corporation that monthly sells a huge amount of their coins, and they're paying lobbyists to convince people that their coin isn't security. And it's like, what? And then like as we got through all the planning and we built the coin, we built the architecture, we built the supporting app, we acquired some of the properties, demos were working. Like, okay, now we need to get this live. Oh, doesn't matter that we're legit. The exchange is only going to take us if we have enough liquidity. Okay, well, how do we get liquidity? We got to be on the smaller exchanges. How do the smaller exchanges take us? We just got to give them a lot of money. How do we? And then they also need us to ensure that the coin is going to increase in price. How do you ensure that? By paying market makers to manipulate your coin, but they'll only do it if you have influencers. So it's like this freaking web of like corruption that everybody was involved in, and it's like Coinbase is complicit in this because they know what their requirements to get on their exchange are, and they know what that leads to. It leads to the fraud. It leads to the manipulation of the market and the influencers tricking people and secret group chats and all that stuff. Like now it's kind of like out there that Coinbase, like you listing on Coinbase, everyone on Coinbase pumps it and then they dump it. Like there's this whole thing that was like being uncovered at that time, and that was really kind of like really unpleasant. We had a little bit of a pause in the development during COVID, which really kind of let me think like, is this really like the way that we have to move forward? Like I remember asking a few times, I'm like, can we just build this on Bitcoin? Like, like Lightning was still in its infancy and apps were like, we didn't have ordinals or anything like that. But in theory, the app could probably be built today on Bitcoin. So it's like, then just realizing like, no, it was just all about, it was always a pump and dump all along. And that makes me kind of like a frustrated maxi now because I see all these coins. You look at pull up coin market cap of any year in the last of any month the last 10 years, and you will not recognize the top 25 list at all. You won't recognize anything except for Bitcoin and maybe two other things. And that's because Bitcoin did such a good job of going from zero to a lot of money, and a lot of people missed out on that it became too good of an idea to not try and replicate if you're a selfish scammer, right? So you're like, oh, I'm gonna make, I'll make Konrad coin. I'll trick people to buying it because it's good because you get access to more Konrads or whatever the use case is. And then I got Konrad influencers to pump the coin, and I know all this shit, and then I just run away with a huge profit. Like that's all these things are for. And like some people might be able to, like Ripple Corporation, they might be able to sell this profit off of the course of years. If they do it slowly and strategically. But in the end of the day, like it's still like no bank is ever going to use XRP for settlement. That's ridiculous. Like I remember believing that when I was young, because I just wanted to believe shit so I could justify buying it and trying to make money off of it. Right? It was just speculation.
XRP is an interesting one because it's like well, XRP and Ripple, like they're two separate entities.
They are now. They weren't when I got into crypto. They were the same thing. It was Ripple was the coin.
Okay.
The ticker was XRP though,
Right.
but Ripple was what they called it.
Right. Okay. And then it's like this giant pre-mine. It's just like the most transparent scam in the crypto world, in my opinion. And it's like all these there's like there's the incentives of like all these people that bought at too high of prices where they want the price to go back up, so they're pumping it without even necessarily being paid to pump it because they just want to offload their own bags. And then I'm assuming Ripple probably pays tons of different influencers and all sorts of different like marketing shenanigans to also pump that coin. Like it's I don't know. It's just it seems like the most obvious. I just have yet to be explained why there's any value specifically to XRP, because I also agree. Like, why would a bank uh, ever use it when they could just build their own, or they could use something that's much more fair launch that they don't have the risk of something like someone else dumping on them, basically.
You're exactly right. Like the fair launch argument is why I think eventually nation states will move towards a Bitcoin type currency for international trade, whether it's like a BRICS backed by Bitcoin, a USD backed by Bitcoin, or just straight up Bitcoin. The ability to trade and know that you're not going to inflate away your currency, like whatever your owed credits are, is going to be really powerful. For just for getting Bitcoin out there.
Yeah, and you also mentioned there like you know, big like you could build something like this tokenized real estate on Bitcoin at this point, and like Bitcoin has changed a little bit, with Taproot and SegWit and Lightning being developed and layer twos. And I also just think like, and I'd love to get your insights on this, but I think that there will be more development happening, not on Bitcoin itself, but Bitcoin adjacent things, that any of this utility that gets discovered or gets created in crypto, um, they'll just take that and use it somehow on some layer of Bitcoin if there's actual utility to it.
I 100% agree for it. I think you're totally right. I think anything that's worth it's like we have one version of the internet, and everything good about any of the other variants of the internet, if they were worth keeping, we've got them now. You only need like and that's where it really comes down to the power of a network effect, right? Like Bitcoin just has such a larger network effect than every other coin. It's not quantifiable. Like you can't just look at the market cap and like, oh, well, it's 7 times larger than Ethereum or something. Or you can't just say, oh, it has like three times more wallets. Then it's like everyone, like people know what Bitcoin is. If you like talk about Bitcoin in almost any like high ranking political office, they're gonna know what it is and they're gonna know what it means. Like Bitcoin is becoming widely understood. I don't think it's at the point where, like, for example, when I was designing this real estate coin, I didn't realize that real estate was artificially monetized due to a fiat currency regime, and that Bitcoin is going to demonetize these other monetary assets, and then it'll become the de facto monetary asset. Like, I didn't have that kind of realization at that point. Like, basically realizing that Bitcoin is better than digital real estate, like, squared. But like, not really having that understanding at the time kind of led me to wanting to pursue these other things. But Bitcoin is starting to become understood. Its network effect is leagues ahead of everything else. And yeah, anything useful will be able to be added onto these other things. Like, we don't like what the most useful thing about real estate or about cryptocurrencies is that it gives people an ability to speculate on something that isn't Bitcoin, which isn't really that useful because like you don't need to do that. Like we've recently seen XRP pump recently, and the influencers will tell you it's because it's destined to happen, and they're so right. But it kind of seems like both times Ripple has pumped to above $2 has been led by some sort of mania in South Korea. In 2017 and 18, South Koreans were first able to invest in like alternate crypto assets through BitThumb, and most of the volume for XRP came from South Korea, and that was what led to the massive pump. And then there was some sort of increased censorship on crypto assets and trading, and then that fell off. But like, what's happening in Korea right now? Freaking tanks are rolling through the street. Martial law, their currency is tanking, their stock market is falling. People are probably panicking and looking for an alternate asset, and it makes sense. They're flocking to the last thing that drove the last asset mania in Korea. So that's probably why XRP is pumping today or lately. I could be totally wrong on that, but it's pumping and it's not staying there. It's being artificially pumped, and it will collapse at some point back to a massive crater. And the only thing that doesn't do that is Bitcoin, because people realize that it's so scarce, so valuable. Like, there's only 21 million Bitcoin. Like, that seems like a normal thing for us to say now, but it still is such a wild concept. Like, I tweeted out the other day on the Bitcoin Well account, or I think it was this morning, that for $20 you can buy 2 block rewards,
Yeah.
or 1 block reward from the year 2069, right? And like, the block today is 3.125 Bitcoin, right? And I think there's a direct relationship between the mining profitability and the price of Bitcoin. Um, and this is expressed in consumer and producer surpluses in economics. Basically, you can kind of create like a supply and demand chart that will outline the price and current quantities demanded by the market, and like, they'll tell you who kind of is benefiting in what way. So kind of an extreme example is a monopoly, right? Let's say the monopoly on insulin, or right. So like, in the United States, they're able to completely upcharge for a product like insulin, which people are going to buy basically no matter what the price is, right? So in this kind of situation, the company is able to give themselves a way larger surplus than basically what the market would naturally demand. And this allows them to extract revenue. It doesn't lead to a competitive economic environment where there's innovation and price improvement. It basically just leads to like wealth extraction from the corporation. That's kind of like the worst market to be a consumer in, the best market to be a producer in. The best market to be a consumer in is perfect market competition. And in perfect market competition, the producers have the least amount of surplus that they get. They're basically just squeezing by, getting really, really small profits. It's an extremely competitive side on the production side, and no producer is able to have any sort of influence. And by that I mean, if we talk about oil and gas exploration, you're able to acquire exclusive government contracts that allow you to have a monopoly on oil extraction in a certain geographic region, and that allows you to basically entrench yourself in the market and prevent competition from threatening you, which basically reduces the competitiveness of the overall end product being oil, right? So the opposite is true with Bitcoin. No Bitcoin miner is able to influence any other Bitcoin miner. Anyone can mine Bitcoin anywhere at any time in any different form of energy. And the only way that Bitcoin miners can influence one another is collectively through the difficulty adjustment. That's the only thing that Bitcoin miners can indirectly influence. And that's such an indirect thing, because the larger the Bitcoin mining is, the less a massive corporation will be able to, like Hut 8 just announced they're mining some Bitcoin, right? If they converted all that Bitcoin into ASICs, they wouldn't really disrupt the Bitcoin mining industry in a noticeable way. They might lower the profitability of everyone, through a small change of difficulty adjustment, but they're not making anyone like close up their shop and go home. And because of the long-term expected value revenue play, which is the investment thesis behind Bitcoin mining, they're still going to try and stay and tough it out and hodl their coins for the future. So because the production market is so insanely competitive, it means that the consumer side is an ever increasing share of the pie, but also objectively in terms of size and value, the consumer surplus. And that is represented in the price of Bitcoin, where everyone who holds Bitcoin gets a benefit from Bitcoin continuously becoming more valuable. And it becomes more valuable not only in its price, but in its adoption and usability, and it's like how many people are even willing to accept it. So like the market structure of Bitcoin is perfect. It's the first time that perfect market competition, I argue, has actually been actualized in real life. Normally, this is like a theoretical model you're taught in introductory economics to teach you about opposite sides of market extremes. But the only way that this really happens in real life is like a farmer's market, which is like not really at scale because you don't have the ability to buy and sell from everybody. It's kind of like there's geographic constraints there, but it's because no farmer can really influence another farmer. Like they kind of have their own land. So like if you think about like different companies like Tesla and large companies can influence the government to make decisions that benefit them. They can lobby the government. Every Ethereum and Ripple are lobbying the government to make the government more crypto friendly, right? Bitcoin kind of has this slow and steady approach where we don't have this. We can't just print $50 million of our own token and just pay people to market our coin for us, right? Like it's a decentralized entity. Any organization like me at Bitcoin Well, like we have our company objective and structure, and we tangentially support Bitcoin growth, but we don't like directly like market Bitcoin. We don't like lobby to Congress for Bitcoin, right? Like even Saylor doesn't work for Bitcoin. He just works for his company, and he's like trying to just share a fruitful, treasury strategy with other CEOs, which their only real job is to generate shareholder value. It's like not really much else, right? So he's trying to help them do that better, which kind of ties back to network effect. And the reason everyone is so willing to embrace it is because you don't have to worry about getting thwarted by the producers being able to manipulate you, being able to manipulate your access to the coin, being able to manipulate the fairness of the coin. Like miners cannot make Bitcoin undecentralized. Bitcoin is just fundamentally decentralized. That battle was already fought in 2017 with SegWit and the user activated soft fork. So like the users control Bitcoin, the rich people and the corporations don't control Bitcoin. It's decentralized. It's not going anywhere. It's unstoppable and it's valuable as hell. So
You mentioned there the block reward going down. That's another fear. I'm just trying to address some fears and kind of mine your mind there because you're in mining and you know a lot about it. But what do you think? What do you think happens to these miners when this block reward keeps getting halved? Way down the line, decades from now, will there be enough fees from the on-chain Bitcoin to support the miners? Like, what do you suspect will happen?
I mean, that's a really good question, and I think a lot of the things that have been true about Bitcoin mining so far will just continue to remain true. So one is that the ability of the individual household miner to make money profitably over time just continues to decrease. Like 2000, like many years ago, folks were able to mine crypto, alt cryptos or Bitcoin in their garage, in their basement, whatever, and that was fine. They were able to make a lot of money. That hasn't really been the case anymore. It's now been, we see a lot of companies that are mining, but in the last 5 years, we've seen a lot of consolidation within the Bitcoin mining industry. And that just becomes that as the profitability decreases on a per hash, on a per hash basis, the ability to manage costs more effectively at scale is where you're going to be able to make more of your money. So that comes down to being able to negotiate a really good power deal with maybe a local power grid company, or being able to build the infrastructure site cheaply or in a low risk weather area as possible where maintenance is still inexpensive. So basically finding ways to cut down all of your costs as much as possible. But that's only going to take the Bitcoin mining companies so far. I think I've seen some speculation online, and I support this thesis where eventually we won't have Bitcoin mining companies. We'll just have utility or power companies, and Bitcoin mining will just become fundamentally an aspect of power generation. And what I like about Bitcoin is how it so well blends ideologies from the right and left. So the right are obviously very in favor of freedom of property, freedom of expression, and being able to express yourself through your property is a form of expression. But on the liberal side, there's this very large thing of being able to make sure that the little guy is able to not get disenfranchised by the big players, and that there's an equal representation, financial inclusion, and all these things are like fundamental Bitcoin properties. And so I think that despite having a lot of negative pressures from left-leaning governments in the North America and in Europe regarding censorship on Bitcoin mining, you're saying, oh, it's conflating with our energy goals or green initiatives, etc. Bitcoin actually supports that. It pays you to have renewable energy. When normally the taxpayer is doing this or the government's going into debt to do this, Bitcoin can just do this through a secondary market that is extra. So if you think of the total amount of spend that can happen within an economy, you can either subsidize it, which means take money from the government, give it to the company, for just moving money around, or you can have new money appear from the Bitcoin mining industry, and that money stays in the government's hands and they can spend it in a different capacity. You're now able to increase your GDP fundamentally more because you have more income flowing into your region. But at the same time, you're able to incentivize the development of more additional renewable energy sources and have a more stable energy grid. And this is really important as we talk about moving away not just from fossil fuels to renewables, but also the eventual adoption of nuclear energy. And nuclear energy produces a lot of energy, and a lot of that time, the energy isn't being harnessed fully. It has to be distributed. And when you distribute energy over long distances, you lose a lot of that power. You could be losing money. So, like, the way I like to think about it is like, imagine you're a baker, right? And you've made too many loaves of bread that day. Like, do you want to just try and ship it across the world and spend $5 shipping a $6 loaf of bread and it's going to arrive in bad condition? Or you can just throw it in this magical bin, and that bin will give you half the price of what you normally pay at the market, which is kind of like what Bitcoin mining works, right? Like, if the Bitcoin miners aren't going to pay you the optimal amount of energy because the market's going to pay you more at that time, then turn them off and pay, and give it to the grid. And the turning off feature is what makes also Bitcoin miners extremely complementary to the energy system, is because you can't just turn off a nuclear generator. You just can't. Like, they stay running. When you start an oil and gas exploration, you start extracting that oil and gas, and that you can't stop doing that. You can burn it off to stop it from polluting the atmosphere, but like, you're actually able to flip on a secondary revenue source instantly and then turn it off instantly without any revenue lost. Like, you don't. There's no power. Yeah, it's the. I wrote an article for Compass describing the ASIC as a business unit, right? Like, it has inputs being basically electricity and internet, and its output is Bitcoin. Like, it has it costs and revenue. Like, and if you think about that, like, it's the simplest business to operate because you're going to have guaranteed revenue. You're not going to have your maintenance is going to be minimal, and ASICs increase in value as Bitcoin increases in value. If you look at the cost of an S19 today versus at the start of the year, or versus 18 months ago, that same ASIC is going to increase in value if it just sat on a shelf and hasn't ran at all, because the Bitcoin it generates is now worth more. So like, you have different sources of revenue. Like, some people even trade ASICs, which is probably, you probably shouldn't do that because Bitcoin is much more liquid and easier to hold. But like, there are ASIC resellers that make money off of this. Their value is variable.
One of the most fascinating parts about Bitcoin mining to me, and it's always a talking point because I'm often trying to talk about Bitcoin to friends and family that are very environmental focused. And I talk about the fact that Bitcoin mining is a first buyer and a last buyer. So it's able to buy electricity immediately upon generation, where they might not have the infrastructure to even start transmitting that to the grid yet. And then when the grid doesn't need it, they're the last buyer. So that, they'd rather sell it to the grid because you're going to get more for it. Like, that analogy with the bread, selling it for half price, the leftover bread, is a great analogy because that's exactly what it is. They're going to make less selling it to the Bitcoin network, but they still get something for it as opposed to just completely going to waste. And then that funds that project, right? If it's a renewable energy source, it's going to fund them to increase their renewable energy, which is just, yeah, it's the incentives there again is just, it's so aligned.
And like, we talked about Bitcoin is scarce, but it's like, the ability to spend public resources for fixing and improving the power grid is also scarce. Like, we don't know what the max or minimum amount is, but there is a limit, and we need to spend that money wisely to improve the grid of our society and our country. And the ways that we can spend that money is we can improve the on-site power generation, or we can improve the distribution of that power generation, or kind of a mix of the two. And one of the things that really surprised me as like a researcher on this topic is that the cost to transfer energy efficiently without substantial power loss is extremely expensive. Like while that technology exists, it is present on such a small number of like grid transportation miles in the United States that it's like, and also it very quickly was realized that this isn't a feasible way to solve the power problem. The feasible way is to have more power production localized, but the downside of that is that when the market isn't buying it, it's really expensive, and then the operators aren't incentivized to do that investment in the first place because they're not going to have the consistent returns. But combining that with Bitcoin mining is where the opportunity comes in. And there's actually an article I wrote, it was one of my most recent pieces at Compass, and it was talking about how in Norway there was a small town that got the Bitcoin miner, local Bitcoin miner, to shut down their operations, and the power price for every citizen in that town rose by about $250. And what that shows that Bitcoin mining subsidizes your power. And the thing that was funny was that Norway has a really strong policy against Bitcoin mining because they're very environmental, and Norway is uniquely positioned with their massive hydro resources, where they're able to generate hydro energy like nobody else. So their grid is like 99% renewable type thing, like right. So they feel very validated in this position of being only for the environment. And someone online said Bitcoin mining is bad for the environment, so we don't like Bitcoin mining. But what I think is actually really funny is that they spend like I think it's billions of dollars every year subsidizing Tesla purchases and EV purchases. Which what is an EV? It's a piece of technology that consumes a lot of energy, right? It's a computer basically with wheels that consumes a lot of energy, and it's an ASIC is just that but without the wheels, but it makes you money instead. And that kind of like now if like, I was thinking like okay like why are we subsidizing this one piece of technology that just consumes a lot of energy, and like people say Teslas are bad because they consume a lot of energy at the grid, right? So it's like not that I equate with that, but it's like okay so they're giving money to these EVs but they're banning these computers, which are both just the same thing basically. So I was like, I found it to be really hypocritical and misguided, and it seems like the policymakers in charge don't fully understand Bitcoin mining, which is then clear by their the way that they detest it. And I think that shows opportunity for how much room Bitcoin has to grow still within governments. Like the like for the left, when the left embraced Bitcoin, because right now it seems like it's been really emboldened by the right, especially with Donald Trump's recent election win. Like once the left realized that it's not like a left versus right issue, it's like a for everybody issue. That's when we're gonna see like massive amounts of hyper Bitcoinization, like nation state support on every level. It won't just be FOMO driven. It'll be like, oh, we understand that this is like a greater good type thing, so we're gonna work together on this. And that's what when we actually work together and aren't bickering and aren't just chasing price gains, like that's why I think it's gonna be exciting.
Yeah, I agree. Bitcoin's totally nonpartisan. It's kind of been taken over as a political talking point to some degree, but I don't think it really fits in there. It's just that's just a momentary thing that eventually will work itself out. Another thing that find interesting about Bitcoin mining is the quote unquote waste heat that comes from Bitcoin mining, and I think that this will tie in into the future as well, just in the way of like we all need to heat like this, heat is incredibly useful. There's lots of industries that need lots of heat. Even when Ethereum was proof of work, I used to heat my office just with my GPU. I would just mine Ethereum, leave my computer running, and then I didn't have to pay for heating, or like it was like subsidized by the the crypto network. And I see this just happening more and more as you mentioned, like miners have to become more efficient. There'll be some consolidation. There'll be all this kind of things. Well, the waste heat could be sold. It could be used. It could be yeah, it could go to use, and that would allow for even more efficiency. And I think that there's a lot of room for development in that space with Bitcoin mining.
I'm an economist by trade, but not engineer, so I wouldn't be adept at how to transfer the heat necessarily. But like, oh, I totally agree. Like like the ability to capture the additional resources produced by the ASICs is definitely, there's definitely a huge thing there. Like we've seen folks that do home mine. Like while I did mention that home mining isn't necessarily the level of profitability that it was once in the past, home mining is a way to do a few things. One, you can convert, if you have cheap energy in your area, you can buy Bitcoin. And while you might be buying Bitcoin at above market rate, you're buying it completely privately. Like that Bitcoin has not been traced to any exchange, any individual. It's just been like from the blockchain, wherever it is, the hiding in the code to the pool to you. And if you're solo mining it, then congrats, like you got a huge payout. But you're probably pool mining. And additionally, yeah, like you're able to heat your home. We have folks that convert their ASIC heat into warming up their hot tub, which hot tubs are super expensive to run. So like that can save on your hot tub costs. I've seen photos of folks using Bitcoin miners in green rooms in Northern Europe to heat up the green room, which also underscores its pro environment. Like if you can live in an enclosure in an enclosed space with a Bitcoin miner, like you can't do that with a gas powered car. Like you'll literally die. With a Tesla, you probably could, but like I think it just shows how harmless the Bitcoin miners are, while also being incredibly useful and helpful for giving people energy. And like energy consumption is the greatest correlation with quality of life. Like if we couldn't heat our homes on a cold day, our quality of life would be worse. We'd spend a lot more of our time acquiring heat sources like furs or fires and modifying our shelter for the changing climate. Like it completely allows us to not think like I was looking outside today during my snowstorm, seeing all these animals fighting over the cold, and I'm just thinking like I'm inside safe. Like I don't have to think about any of these things, and like we're we're very much okay. And Bitcoin supports basically all those functions.
Another interesting thing about Bitcoin mining is a friend of mine mentioned how, and I kind of expanded on it, where I thought back at how cities and towns were developed, and it's like there's, for instance, there's mining towns, and these towns still exist to some degree, and they're there because of a resource, and there might be a future here on Earth where towns are developed around stranded energy because of Bitcoin mining, because they can create like incentivizes infrastructure to be built at these resource points, like a geothermal vent or something like that. Uh, I mean, it might shape the different towns and cities of the future. Bitcoin mining.
Well, I mean, I think it would definitely will, and especially in terms of the way that the cities can be positioned and structured. Like the in the past, for example, I come from a logging family that goes back a while, and the logging towns in northern Ontario are all positioned on bodies of water, so you can chop the trees, put them on frozen rivers and lakes. And then when they thaw, they all go to the central point, and then they can be shipped out or transported out on trucks, but mainly shipped out. And that entire infrastructure is just handled by a single Bitcoin transaction. So like your ability, if you're like focused solely on Bitcoin mining in that local area, you can have a pretty lean town, like pretty lean, let's call it settlements, right? It might even be pretty small because the amount of necessary supporting services will be so lessened due to the small need for infrastructure and whatnot. I think it'll also provide a really interesting opportunity for. I'd like to see in indigenous communities that are placed by the government, placed in northern regions, kind of pretty far from like most of the Canadian infrastructure in terms of transportation and energy. And at the same time, like you think that it seems like a fitting recourse for the indigenous tribes because they've had so much of their land taken and so many promises broken from the government. It seems like an interesting opportunity for them to be like, okay, like we'll take our resources back and we'll do with them as we please, and we'll have self-sovereign money. Like we're going to be able to ensure our sovereignty finally and not have to rely on any sort of good graces by you. We have our independence. And like I think kind of like tying it back to Bitcoin, kind of like Bitcoin does give you that independence to be able to not rely on any individuals, being able to really act on your own decisions. And like I mentioned before, like freedom of expression is parallel with the freedom to consume or freedom to purchase or spend, because that is a very important form of expression. Consumption is like I saw it as a joke. It was like I spend, therefore I am. But like that kind of is a fairly important or a true statement within today's society. Like if you can't spend, you can't like China's ability to censor spending through the social credit score program is what really shows how quickly an individual can be suffocated by not being able to participate in the economy.
Oh, totally. I mean, we are only alive because we're able to consume the goods that make us survive. So, I mean, putting any sort of restriction on what you consume to have your life, like the life that you want to have, I mean, that's yeah, very crippling to people. So yeah, I mean, Bitcoin frees people from that. It allows people to have a fair payment system. Really, it's just a lot more fair than what we have now. Um, so coming into Bitcoin a little bit more, I'm curious about the Bitcoin well and your kind of position there, and one thing that I get asked a lot because I talk about Bitcoin well on this podcast a lot is the non KYC options. I mean, why does Bitcoin well? There's two things about Bitcoin well. They're non custodial. They have a non custodial platform basically, so they never hold your Bitcoin for you, and they offer non KYC options. Why is that important? Why are both of those two things important?
That's a great question for us, and then it ties into the origin story of Bitcoin Well, which predates me quite a bit. In 2013, which is when the company was conceptually founded, and I think live in the end of 2013 or in 2014, Adam O'Brien was in Edmonton, and it was not easy to buy Bitcoin. It was something that was kind of popping up in some spheres, and your ability to buy it was extremely limited. You'd basically be sending money out to some random guy in an alley, which could work if you had a relationship with a fella, but you probably didn't, and it was a little bit scary. Buying Bitcoin off of Mount Gox, sending money overseas. And I think this was pre Coinbase, or when Coinbase was maybe just getting started and not really like a viable option, especially for Canadians. And so the ability to buy Bitcoin was not something that had really been solved by the market at that time, especially not online. Like there's no like really easy exchanges. Wallets were also still really in their infancy. So the way that Bitcoin well started off was actually through Bitcoin ATMs. In the early days, Bitcoin ATMs were some of the best and easiest ways to buy Bitcoin. Initially, there were no KYC limits for Bitcoin ATM purchases, which if you think like, when was the last time you got KYC for buying stakes? Like they say, oh, you bought too many stakes, we're going to KYC you now, right? Like that's not going to happen. And so the ability to kind of not KYC somebody was basically just like the standard way that these ATMs operate at that time. There were gradually increased KYC restrictions placed on Bitcoin purchases at ATMs that are still in effect today. We still comply with those today, but it's like you don't need to KYC to buy $20 of Bitcoin. And what's the upper limit of that? Well, we operate within that upper limit range. You can purchase up to $1,000 or below $1,000 for a single transaction, or below $3,000 for a total days total volume. If you want to exceed that, you're welcome to, but then you'll have to conduct KYC as per the Canadian regulations. But so if you think about kind of that origin story of starting off with ATMs, kind of just fundamentally operating in a KYC minimalistic environment, there was no real need to offer additional hindrances for folks who are buying Bitcoin at these ATMs. And the non-custodial aspect is kind of just inherent with the ATM strategy. Like an ATM is not going to hold on to your Bitcoin. It's basically like a brokerage service where you'll insert cash and we send Bitcoin to the wallet that you provide. It's kind of like a vending machine. The vending machine is not going to hold on to your snacks for you the way your fridge will, or your pocket, but you can still purchase them there instantly. And that was the way that we went with that approach. And because nowadays the way that people want to buy Bitcoin has evolved. They want to buy it kind of instantly. E-transfer wasn't a thing, back then. Bitcoin wallets weren't as easy to use as they were back then. There was no Lightning Network. So now we have a lot of different options that are easier to leverage and fine tune for an individual's preferences through an online platform. And that's the way that we've chosen to move. But we kind of have this interesting foot in both arenas where we still have our ATMs all over Canada. So we're able to leverage this kind of new hybrid style service where you're able to go to one of our ATMs, insert cash, and buy a cash voucher, which you can link your Bitcoin Well account to that cash voucher, and then you can redeem that cash to buy Bitcoin on the spot. And what's cool about this process is that you can do it on a fully verified account, or if you create a light account, which is just an email address that's confirmed and a Bitcoin address, then you're able to use that QR code on your Buy Bitcoin page to link a cash voucher to your account and buy Bitcoin through the ATM. The total fee is about 7% for the spread and the ATM fee, and you have no KYC in the entire purchase. It's the cheapest and fastest way to buy non-KYC Bitcoin, and you have a lot of control. You can accumulate cash vouchers, redeem them when you want on chain or to Lightning Network. It like you have a lot of options there, and I think that Lightning Network, integration is really like what sets us apart from like the industry is that we have Lightning services on everything. Some of our services are de facto Lightning, like our rewards. We don't give you fiat rewards that we custody. We give you Lightning. We give you Sats, and then we zap them right to you. You get a reward, you get the wishing well, and there's some fun randomness to it. You can get 1,000,000 Sats, which hasn't happened yet, but we've had several go through for 210,000 Sats, which in Moose bucks, that's like almost 300 Canadian dollars now. So like that's like at the start of the year or the year and a half, like that wasn't as nowhere near as much. So they're constantly increasing in value, and it's Bitcoin denominated, so you're gonna want it. Yeah, so that's kind of like how we kind of evolved to where we are now, with starting off the business as an ATM business, expanding with the growing needs and desires, and the evolving tech of like Lightning, and just wallets work way differently and better now. So it's easier to have them on your phone, cold storage, all that good stuff.
Do you have any insights on how it works in the States? Like, do you guys have ATMs there and non KYC options for United States citizens, or how does that work?
In the States, we unfortunately do not operate any ATMs. It's something that we've looked into in the past, but it's just like a fundamentally different market. And like the way that I think I'm not too sure exactly what the logistics are, but with ATMs, a major kind of cost of the business is managing the cash, right? Like it's not like Bitcoin where you can just move it around the blockchain. Like you have to hire an armored truck and dudes with guns to come and pick up the cash, right? Like we're talking physical bearer assets here. So there are some additional costs and challenges there. And I imagine that's definitely been impacting our potential expansion to the United States on the ATM side. However, we have expanded our online platform to the United States, and we are the only non-custodial by default Bitcoin platform in the United States, unless you're like buying through like Moon Pay or something like that, when you're getting a huge spread on your and you're only buying like $50 on a credit card. Like that's like this is like we support OTC, so you can do wire transfers, big volume transactions, all non KYC. So you just the moment dollars come into our platform, they're instantly converted into Bitcoin and instantly sent directly to your personal Bitcoin wallet. Like you don't have to worry about like I could get abducted by aliens. Our head offices could all explode, and your Bitcoin is fine because it's on your wallet. Like nothing's gonna happen to it. Whereas like if it happens to a different company, we've seen in Canada in the past where Quadriga had some issues with their CEO and all the coins were lost. We had some issues with Celsius and they're taking money and spending on personal things. All the coins is lost. FTX, same thing. Like this has happened countless of times. It's like it's to me shocking that folks are still leaving their Bitcoin on exchanges when like they don't even know who's custodying it. Like there are Canadian exchanges that custody their Bitcoin in Coinbase. Like I bet you most of their customers don't even know that their coins are outside of Canada's jurisdiction. Like that's insane to me.
No, it is insane. And as somebody who creates like Bitcoin content, I feel so much more comfortable advertising something like Bitcoin Well because there's not that counterparty risk. Like people, they have a little bit of egg on their face. Some of these crypto influencers who advertise for BlockFi and FTX, and like, I mean, those risks were always there. You're allowing customers to leave the Bitcoin on there, and you just give them an IOU. But with Bitcoin Well, it's like, it goes directly to their wallets. I don't have to worry about people that I refer. Like they get their Bitcoin.
Those recommendations were so antithetical to what Bitcoin was founded for. Like Satoshi invented Bitcoin because the exacerbation, like there are way too many IOUs in the credit market, and it led to just a complete collapse in the great financial crisis. And then Satoshi was like metaphorically throwing his hands up in the air. I'm like, all right, here, just no more IOUs, custody your own money. It's now feasible. Like you can't custody stocks, you can't custody gold feasibly. Like none of these things you can. And then there's risk in terms of trying to transfer these things, get them validated by anyone that wants to accept it. Like so many layers of complications that basically make self-custodying various assets completely impractical. But with Bitcoin, it's the opposite. It's like it's almost essentially the same. It's the same cost to custody your Bitcoin on exchange and to self custody it. It's basically free. So you're making a free choice to have to get for a risk that you don't need to take when you can just have your Bitcoin on your own wallet. Like it's not like, at least with BlockFi, it's not a free choice. Like you're kind of getting tricked into earning, getting some money to kind of mess up your decision making process. But like getting paid to give away your Bitcoin is still antithetical to what Bitcoin was invented for. It was invented to self custody. So like why like is 5% worth like throwing away what Bitcoin was invented for, and eventually like you're probably going to fall to the same thing that the predecessor to Bitcoin, fiat, fell for. So it's like just don't. We know how this song ends. Don't play it again.
I want to go back again to the attempt to tokenize the real estate with this crypto company. That's kind of like a narrative that's coming out now. I've heard even like Larry Fink talk about how tokenization is going to be this new thing that's great for financial markets. I don't really have any insight on that. I don't really understand. Like, is it just because it'll take down some of the friction of ownership or payments, or like, is this actually something that's going to help financial markets? Some crypto tokenization of real world assets? Like, do you have any insights on that?
I guess a couple. So one, tokenization, I think allows people that aren't banks to become banks in some ways. And like, if you think about, a typical banking customer, they're actually involved with a lot of different institutions, kind of all under the guise of like the banking UI. Like if you log into CIBC and buy stocks, like you're involved with the Toronto Stock Exchange. Like lots of different companies are kind of involved there. There's brokerages, like who knows what custodians might be involved in that service, right? So there's a lot kind of happening underneath the hood. But with Bitcoin, it's kind of like a lot more kind of direct. So if you're going to be opening up some sort of like tokenized service, then you can be the bank and the exchange at the same time, which is kind of like why like everyone wants to basically be a bank, but without all the additional work that banks have to do, and tokenization kind of allows you to do that. Like everyone wants the cryptocurrency exchange business because you get to hold so much capital, you get to acquire so much, but your overhead is so lean. Like I remember when Binance's 2017 Q4 report came out, like they were like a new company and they were like billions of dollars in profit, right? It's like they're just complete cash cow businesses. And it doesn't surprise me that folks like Larry Fink want to have more financial control, and basically pay out less of their potential revenue out to someone like a bank, like a Wells Fargo or a JP Morgan, right? Like they see an opportunity to kind of step in and fill that void.
So they can cut out some middlemen, kind of, and make it just less intermediaries by not having the bank.
Yeah, I think the promise of cutting out middlemen means that everyone thinks that they can be at the top, and then everyone else will be below them. I think that's kind of like the goal that a lot of these people see it as.
Right.
It basically means that they're going to be able to keep a larger share of the pie. Um, and I mean, I've seen since 2017, there's been talks about like tokenizing everything, tokenizing stocks, and all these things. But I don't. One fundamental view that I heard on that I really really like, and I think it's worth rehashing, was from Jimmy Song, and it was that fundamentally Bitcoin's property laws are enforced on the blockchain, right? Like if I conduct a valid transaction, that Bitcoin leaves my wallet and enters someone else's wallet, and if you're like pissed, like doesn't matter, that Bitcoin has been sent. Like there's no legal recourse for making that Bitcoin come back. But like if I conduct like if you conduct like a if you're involved like a fraudulent transaction, or if you're involved in some sort of thing, you can typically ask for like legal. Like if I like walk in your house and say this is my house now, like the Bitcoin blockchain is not going to decide that. Even if I have a token that says like if I stole, okay, if you have a house and you have a house token for your house, if I like hack your wall and take it, like it's not my house, it's your house. You have the like all the legal and like legal infrastructure saying that's your house, right? So like my tokenization claim on it, if it's not enforced by the blockchain, then and it needs to be enforced outside of the blockchain, then there's like no point of it being done on the blockchain in the first place. If it requires a legal system, then it doesn't require a blockchain. Bitcoin exists outside the legal system.
It's like a real world asset still has to be the ownership of it still has to be enforced in the physical world. Tokenizing it doesn't change that. So that was like my like this thing about this not making sense. But maybe becoming more efficient and cutting out some banks, maybe that will help. I don't know. That side of it.
I think the banking sector will shrink. Like right now, I looked at this recently. I think the banking sector accounts for over 7% of the entire US economy, which is like that's representative of a massive amount of labor and intellectual capital that's been captured in a high earning industry that's just extracting rent seeking basically behavior from its citizens. And if you think like there are smart ass people in banking, like they could be working in medicine, in engineering, in different forms of technology services. Like there are better places to put your money, your energy and talent than to pursuing another asset that's escaping inflation when we've already solved the monetization value preservation story, which is Bitcoin. Like we don't need to invest in real estate or stocks to achieve inflation escape anymore.
Yeah, no, definitely. I don't know how much you can talk on this. Maybe I got to talk to Adam about it too, if I have him on. But your thoughts on MicroStrategy? I know Bitcoin Well has just done their first buy of Bitcoin as a treasury reserve. They're going to be doing convertible bond offering as well. They're a publicly traded company. What do you think about what Saylor's doing there with basically selling these financial products, selling shares, taking that cash, buying Bitcoin, taking that off the market and holding it indefinitely? What do you think about the whole MicroStrategy scene right now with Bitcoin?
Well, a company can exist for a few reasons, and whatever they say on their mission statement is usually one of their main goals. But typically, a publicly traded company, exists to provide shareholder value. Like the shareholders own the company. There was a really important lawsuit that happened in like the 1930s where Ford wanted to give his employees a huge bonus. It would have been like line workers getting like a 50 grand bonus equivalent of in inflation adjusted terms, and the largest public shareholder said like, no, this is company money, it should go back to shareholders. And that basically led to the thing where you can't just give revenue to the employees. The only way this can be indirectly done now is through stock grants and type thing and things like that, but dividends are typically were going to be distributed to shareholders. So shareholders are expecting the stock price increase. And when you work for a company, or when you are a company like MicroStrategy is a smaller company working in a market surrounded by dominant players like Microsoft, and they're not able to use resources like Microsoft. They're a smaller company. They're not going to be able to grow as fast. And Saylor's argument was basically that his company growth rate is pretty stable. He's been the CEO for like over 25 years. And he knows that the company can't grow faster than 10 or 15% a year. And when inflation is more than 10 or 15% a year, they're basically working at 100% just to shrink and lose money. And he realizes that Bitcoin's scarcity means that it's going to go up forever. Like, perfectly inelastic supply curve, like every high level observation of Bitcoin, Saylor just got it. And he's like, holy crap, I need to buy this with my company, because most companies have cash. Like if you look at Apple, they have like $350 billion of cash. And cash can only be invested into a highly liquid asset, which is typically like a treasury security. So like a bond, and those bonds are losing value. So you're basically paying like a sophisticated investment team to lose money for your company. And it seems like it's just a horrible use of resources. And instead of that, spending that money on Bitcoin is useful. And then you're like, okay, well, we can issue stock to fund our company growth in some manner. Why not just buy the best investment asset, which is Bitcoin? And like he equates it to buying property, like buying real estate. It's like if you had the opportunity to buy huge sections of Manhattan or huge sections of Texas or California, it would seem like an amazing investment opportunity. But just because Bitcoin is a digital form of scarcity, people get a little bit scared about it. But to put it this way, like Michael Saylor had loans for less than 1% to buy Bitcoin. The interest rates may have changed and affected this loan structure, but I mean, who wouldn't want like 1%? Like Bitcoin is gonna do more than 1% over 10 years. Like that's like crazy. So, and on the flip side, we're not going to see deflation, which is when the currency itself becomes more valuable, because that's antithetical to the government's doctrine, which is to spend more and take on more debt. And the only way that that doctrine becomes sustainable is if you're able to devalue the currency over time to make your existing debt burden worth less in the future. But if that debt burden becomes worth more, combined with interest rates making that value objectively larger, then you're just all of a sudden facing an unescapable debt burden, which is why like the government will militantly oppose deflation. Like it will, like yeah, like I don't know if you want to look into Alex Gladstein's the petrodollar, talking about like the true value source of the U.S. dollar and how there were a lot of underground or under the table deals with Saudi Arabia, and basically making sure that everyone who bought and sold oil in the Middle East used U.S. dollars, even if you're in Europe or Asia, which kind of doesn't make sense, but it helps support the United States dollar. Demand for bonds, which allows the U.S. government to issue bonds and further spend their money on things like the military and a lot of other things. So it, that reason is why the speculative attack works, because Bitcoin is so scarce and it's so likely to increase in value, and the currency is guaranteed to lose value over time. You're choosing two sides, and like the Bitcoin side seems so obvious in that situation. So I think it's inevitable that more and more companies are going to do this. I think it's really similar to the currency collapse that happened in Austria or Germany in the 20s, and the not like the price appreciation or the war background, but more of how people viewed the purchase of goods in that time. Like everything was becoming more and more expensive in their local currency, but they would always describe the rich Americans and their gold-backed money as being so wealthy because the gold stabilized the value of their currency. And so when these people are needing wheelbarrows full of cash to buy loads of bread, they could buy bread with just a normal amount of cash. Not that the American economy wasn't falling apart. Like the American economy was in a really rough state, but they still had gold-backed money, and that allowed their currency to float a lot better while the rest were all sinking.
Yeah, it's just a simple arbitrage of buying a better currency, a better asset, and with a weaker one. It's really that simple. Yeah.
It basically is that simple, and he's using complicated finance to accelerate his ability to accumulate more and more Bitcoin. But every every person and company should basically buy Bitcoin. Like you shouldn't be holding fiat money that's an IOU and guaranteed to lose value. Like, and it's going to cost you money to deal with it because you're going to have to spend money to purchase investment vehicles to escape the value depreciation of that currency.
Yeah, that's well put, Conrad. Do you have anything else that you want to cover that we haven't we haven't talked about?
I guess I'd have to shill Bitcoin well at some point, or just talk about how we're a kick-ass company. Like we have some of the best. Like Bitcoin well has some of the best Bitcoin products I've ever seen. Like, I think what really set me over the edge of being like, oh, I work for this company and I like what we do, it aligns with my values, to wait, this company does this thing the better than anybody else, was with our swapper tool. That was really important for me because I thought the Lightning Network was this huge opportunity potential for Bitcoin that was being underrealized, and it was kind of exclusive to the folks that were pretty technically sophisticated, which means like you're running your own Lightning node, which some Bitcoiners are going to hear this and think, oh, that's so easy. But like the average person is going to struggle with that. And I like to kind of like, as someone who's on the growth side of Bitcoin, well, I want to try and empathize with the average person who's going to buy Bitcoin. And we want an easy experience that it just happened. We just want it to work. Like we don't need to know how it works. We just want it to work. And like, like we don't know how I don't know how the internet works really and how we're talking, but I just know that if I click on the link you send me, we're gonna be chatting, and like that's how most people use the internet, and that's how most people will use Bitcoin. And having like a swapper tool that allows you to engage in the full cold storage side of like storing your Bitcoin on the blockchain, being super secure, but then also fully benefiting from the cross-border instant payment side of Lightning Network, like you get the best of both worlds without any real friction in switching between them anymore.
Yeah, I love that too. The first time I used Lightning, I had to pay, I don't know if it was jolts or bolts. It was one of those, but I had to pay like a 1% fee on the Bitcoin that I transferred to Lightning. And I was like, is there any other way to do this? Like, I don't want to give up my sats just to have like be in the Lightning network. And then, Bitcoin Well comes out with this swap function, 0% fee. I'm just like, this is a game changer.
And like it changes the ability to how you can self custody, because self most folks would use a custodial exchange to self custody because of the inherent UTXO consolidation that would occur, right? Like if you wanted to buy $20 of Bitcoin every day for a month, and then you couldn't you couldn't realistically do that in a non-custodial exchange until now because of our Lightning tool, right? Like you can buy directly onto the Lightning Network, load up your Lightning wallet. When you reach a balance that you want to consolidate, you can just one transaction, swap it, send it out to your wallet through us. You don't pay a sat for any of that process unless your Lightning wallet is going to charge you like a routing fee. And then you got your cold storage topped up with one nice chunky UTXO.
Yeah, it's beautiful. I just did it the other day, made a video about it. I think that I'm hoping that it catches on a little bit because it's a great way to consolidate UTXOs, in my opinion. So where can people find you, the Bitcoin Well? I'll throw all your links in the description. Where do you want to send people?
I mostly spend like my social media time on the Bitcoin Well Twitter account, which is at the Bitcoin Well. I have a personal account at Bitcoinrad, BITKIONRAD, but I don't really use that too much. I don't want to part with any potential sats to pay Twitter to get a blue check mark. And I'm already, engaged with so much of the community through the Bitcoin Well Twitter account, which gives me like a really great pulse on not just our customers, but the overall kind of enthusiasm for using Bitcoin. So I like to kind of stay within that lens rather than my esoteric profile, which is just more for like the economics of Bitcoin and the high level kind of guesses and stuff like that, if you want to call it.
Awesome. Well, thanks so much for your time, Conrad. I really appreciate you being on the pod.
Thanks for us, and it's always a pleasure. You're one of the best folks to chat to on this, so I love it.